If you can hear me, say g'day. Apologies for the delay. We're just ironing out a few technical gremlins behind the scenes. I hope you're well for this Wednesday evening, this Wednesday afternoon. If you're in WA, if you're out near the Pilbara, it'll probably be noon to you. So thanks for joining us. I've got Rob on the line with me tonight. As always, we're fashionably late to the show, but there's a quiz and there's a poll going on in there, and it says, have you bought US stocks inside sell? And I can see no thanks is off to an early lead, but no, but I plan to is not far behind. I think this is opportunity. So Rob, we've got to convince some folks to start buying US shares. Fortunately, we're talking US shares tonight because that's what you guys wanted me to talk about last week. So as you know, I tend to focus on ASX and global shares. So I'm stoked that we get a chance to go across the pond and turn our gaze to some of these big tech stocks. Nice. Pilbara, is that right? Eve, is that what you mean? I've got it sorted. No, you're right. Tim, howdy. Patrick, g'day. Jason, hello. We've got a lot of interesting companies to get through tonight, so I won't delay. There's 6, in fact, and you guys know as well as I do, probably better than I do, that when I get talking about multiple companies, it tends to take all night. So let's not delay. Let's get into it. And just one final thing. Okay. Hey, Owen, you're looking very pixelated. I'm looking very, very pixelated. Am I? That could be my internet connection. I certainly hope not. Hopefully, when we go away to the screen and I share my screen, so yeah, you'll be able to catch the tail end of this, Jake, if you are on the train. I tell you what would really help us out, Jake, is if you now that you're on the train, do is take your headphones out, assuming you've got headphones in, take those out and play Selfwealth live as loud as you can in peak hour train ride. I think that's the most sensible thing for you to do to get everyone involved in the investing conversation. So just go ahead and do that, make it go viral. Just kidding. You probably won't win any friends doing that. Okay, so start off with our quote. This is a quote joke, and this is from Bill Gates. I choose a lazy person to do a hard job because a lazy person will have an easy way to do it. This is from Bill Gates, and the photo here that you can see is a young Bill Gates. And I think I've said this before. G'day, Shell. I think I've said this before, but early in he was building Microsoft. What Bill Gates would do when he was just kind of trying to relax or just kind of de-stress, he would get in his car and he would drive as fast as he can throughout, I think it was Nevada or California, wherever he was. He would drive as fast as he could everywhere he went, and he'd just drive throughout the night. And one day he got caught, and then he got a mugshot, which is this one right here. He doesn't look too upset about it, though. So I don't know, no speeding, but he didn't seem too upset about it. Just here, have you subscribed yet? The lady's looking very upset for those folks who haven't subscribed to Selfwealth Live yet. We'll talk about YouTube tonight and the power of YouTube. And it's definitely a really important channel for us to communicate education. So thank you. As you say, Eve, finding the easiest solution is a good goal in most cases. You know what, Eve, we tend to do this as humans, tend to find the easiest solution to things. And it's actually a bias of our to find the default solution to everything. It's not even just a heuristic. It's actually something that we do. And it's something that even medical doctors are trained to do as well, to find the easiest solution to something. Just a quick nudge here. If anyone hasn't already done this, please go ahead and give this a crack. If you haven't already activated 2-factor authentication within your Selfwealth account, it is super easy. So all you have to do is go into your account, as you can see here, click Enable 2FA, and you are good to go. That's all you've got to do. There'll be a little extra prompt there once you click that button, but that's as simple as you like. So please go ahead and do that. I mean, for those of you that have been paying attention to the news lately, obviously we had kind of the first domino to fall was Optus, but now rumors of customer accounts getting, totally, I guess, just from Medibank. And I think there was some news that others, like maybe some retail giants, have also faced the same fate. So please make your account secure, particularly when it comes to money and finance. It makes sense to make them as secure as possible. Thanks, Epicris, for doing that. I think it's really important. Stevie, you said, I work in tech. 2FA is the first thing I set up. Should be mandatory. I agree. It's hard. Anyone would love to have 2FA activated, but there you go. So Rob's saying it'll be mandatory soon, but it can't do a hard switch. Yeah, that's the thing. We'd all love to have like this type of security, but sometimes it's a little bit hard. Okay, so coming up on the show, coming up on Selfwealth Live, many of you will know some that are going to come up. So we've just got confirmation back that Kerry Craig from JP Morgan Asset Management and Nathan Bell from The Intelligent Investor will be coming on the show. We'll be joining Selfwealth Live in the next weeks. So Kerry is a macroeconomic specialist. You may have seen him around the internet for. He's just an absolute, I'm just going to say he's an absolute gun at describing how the global markets work and kind of just breaking it down into very simple terms. Nathan, likewise, is a fantastic educator when it comes to individual companies. I just had a conversation with him recently where he said to me, he said that he believes there are only 12 to 15 truly fantastic businesses in Australia. Hopefully, we can bring a few of those with him. So I think, we've got some great guests, some all-star guests coming up. And I'm really looking forward to these ones. So Epicurus, you can see, awesome. Yeah, ready your questions for each of they're both brilliant in their own way. Obviously, you can ask, I'll be asking Kerry about what's going on in the UK, the US, even the Australian economy. And then same with Nathan, you get some questions about basically any company that you like. So please, bring your questions, send them through to us. Remember, you can find me on social media. You can find Selfwealth on social media, #Selfwealth Live. And just a reminder before we get into the companies, of course, one of the reminders that we like to do is to remind you that anything that you hear on tonight's show is limited to general financial information only. It is not personal financial advice. You'll need to see a financial planner for that. So any of the companies that we do mention, I will mention if I have a position in these companies as I go through, but please remember that investing can be risky and to seek the advice of a licensed and trusted professional if you do decide that these companies are interesting for you. Okay, so Ethan, you said that podcast was really cool with Nathan, very philosophical. It was indeed. I think you'll be talking more about companies on Selfwealth Live, which would be great. But yeah, thanks for that. So for individual companies, the US-based ones are usually most popular, I find. Interesting. Okay, so let's get into it. So let's start with one of the biggest companies in the world. I just before we get to Google and Alphabet, what you're about to see, and I'm going to summarize these 6 companies and the results out of what the US and what I've seen so far in a little bit and towards the end of the show. But I just want to say one thing is that it's really important, I think, to get global markets exposure. Whether you do that through an ETF or a managed fund, a listed investment company, through superannuation, or through direct stocks, it's really important to get global exposure. Almost every country in the world has something called home country bias, which is where people of that country tend to invest more in the country in which they live, which is perfectly reasonable about it from a behavioral point of view, because you know Woolworths, you know Coles, you know Telstra, you know them better than you know Home Depot, and you know them better than you know Walmart and AT&T and so on and so forth. But there are so many fantastic companies outside of Australia. Some of my biggest winners over the years, I think my biggest winners by dollar value have been US companies. So I implore you to at least consider one way or another, however you want to do that. Right now, you can see inside your Selfwealth account that Google is actually having a very hard day of it. The company is actually down quite a bit in early trading today, after hours as well. So Google came out with its results. Google owner of just about everything in the world. So it controls. There's a little graph up the chart up the top here. It's a little bit pixelated, this chart, but you can kind of see here that Alphabet, which is the owner of Google, owns things like Android, Google Search, YouTube, Google Maps, Google Ads, many other things. It owns things like Waymo, which is self-driving technologies, Calico. It's got a huge venture capital arm as well. So there is a lot going for Alphabet / Google. But if you dig below the surface, and I'll just blow this up. If you dig below the surface, you will see that by far the dominant business is the Google search business. I don't think, most of you would notice this, but Google is putting more ads into the places that you use the most. So places like Google search and so on and so forth, you're seeing multiple ads now at the top of your search results, which kind of bugs me. But yeah, I instinctively know to go past them. But yeah, at the end of the day, they know how to monetize their platform incredibly well. And it's a virtual monopoly on global net usage. So the big weak spot out of this result, and you'll see this recurring with a lot of these US tech stocks, is the YouTube ads. So YouTube ads actually went back when the year end, the quarter ended September 30. So that was a huge surprise. And a lot of people in the media in particular are saying that the real reason YouTube went backwards was because TikTok, being the Chinese social media platform that's been the fastest growing social media platform ever created. And it's a real threat to a lot of the businesses that we're going to talk about tonight. But I think maybe it's also, we're coming out of the back end of COVID too. So a lot of people were still at home. People have now gone back and kind of like gone outside the house and sought, I guess, their entertainment elsewhere. But I'll bring up some really interesting quotes that I took from the analyst all today. And these were some of them. And by the way, this is our first attempt at a YouTube short for Selfwealth's YouTube channel. So you can check that out on the Selfwealth. Great little videos there, always under 60 seconds. But here's the real nudge for Google. On average, global viewers are watching 700 million hours of YouTube content every day, which is just incredible. According to Nielsen, during 2021-2022 US broadcast seasons, YouTube reached more viewers during prime time on its connected television than any linear TV network. So what that means is Google is basically saying if you watch YouTube on your iPad, or your smart TV, or something like this, more is being watched on YouTube than anywhere else, which is an incredible statistic. That's like saying that there's only one channel and everyone watches the same thing. But of course, it's not like that. But it's just an incredible platform. In the shorts category, and this is the short form video that YouTube has created. I don't know if I can show you this on my phone, but this is I think this is the type of thing. I'll show you just really quickly. Here on my phone, this is the thing. Oh, there's two of me. That's too much. But this is the video that we did the other day for Selfwealth. And basically, this short form video is where we're going. As people's attention spans get shorter and shorter, more people are turning to Instagram Reels, to Shorts, to TikTok to get information. And here we can see that 1.5 billion users are on the Shorts already, with 30 billion daily views. They're saying engagement is strong. We've always said that we focus on building great user and creator experiences first, and then that with monetization over time. As of September, ads on Shorts have officially launched on via Video Action app and Performance Max campaigns. So basically, this huge ecosystem that sits within YouTube itself be truly monetized. So I think there's still a long way for a lot of these brands under YouTube and Alphabet to grow. And in particular, I just want to highlight that, the big reason that the company's performance wasn't as good as people were expecting, and the real reason shares have been kind of sold down, is actually because of the US dollar. So the US dollar is the big one here. Not if you want Alphabet shares to rise. That's comment. I could see the comment, Jay, you were responding to there in the chat. So basically, the US dollar has strengthened against every currency basically in the world. And so any of the revenue that Alphabet earns outside of the US is less. And so we're seeing that recurring theme with all the companies that I'll be covering tonight, but in particular with Alphabet. So you can see here on the very right-hand side, and I'll just blow this up a little bit more. You can see this right here. This is saying that in revenue, the company's revenue actually went up 6%, but if you held the currency stable, it went up 11%. So I think that's one of the key takeaways from this reporting. The next thing, and by the way, guys, if you have any questions about these companies, please fire them through. I love to get your engagement and hear what you have to say. Stevie, just circling back to one of the comments, you said, not sure who said this, maybe you, Owen, but your job, house, and super and shares are Australia-based, so it makes sense to invest in US/overseas markets. Yeah, well, Stevie, I may have said this, but the US market, the global markets are around 97% of the companies in the world. So it makes sense to invest at least some money outside of Australia, in my opinion. There's also, Australia is a fantastic country and economy. We've actually been blessed in that we have the best performing stock market over the past 100 years. But the thing is, we're only one of 200 plus countries. So we've been very, very lucky for that. That might not always be the case. So that's why I just encourage people to at least consider it. You don't have to buy direct stocks. You can use ETFs or managed funds or a superannuation fund. But it's just worth pointing out. So one of the companies that I think, Jake, I know you're on the train, not in the train, but you're on the train. You wanted me to cover last week was Netflix. And so Netflix is one of the most interesting streaming businesses in the world because basically that's all it does. Whereas Disney and Hulu's a little bit much the same, but Disney with Hulu and Amazon TV, Amazon Prime Video, Apple TV, YouTube, all of these other businesses, connected TV services or streaming services, all of those businesses have other ways to subsidize this. So I might just jump to my second slide before I come back to this one. But Netflix come out with a very kind of illuminating, shareholder letter. And they said, our competitors are investing heavily to drive subscribers and engagement. But building a large, successful streaming business is hard. We estimate they are all losing money, with combined 2022 operating losses well over $10 billion versus Netflix's $5 to $6 billion in profit. So I think that's a really interesting takeaway, because there was actually something that I wanted to highlight to y'all in the letter. Is this one right here. So has anyone watched, by the way, has anyone watched Rings of Power or House of Dragon or even the Jeffrey Dahmer series on Netflix? If you have watched any of these three, please give me a score out of 10 of what you think. I've only watched one of them. So tell me what you think. Just so you know, Rings of Power and House of Dragon were the two most expensive series ever created, I believe. And so when you look at the Jeffrey Dahmer one, which is on Netflix, you can see here how much more popular that was based on Google Trends. So that's really fascinating. Some good questions that have come through here. Peter, you've said, so as the US dollar means on US stocks will disappear unless you currency hedge. Correct, Peter. So if the US dollar falls against the Aussie dollar from here, so meaning that our dollar goes up, that's a headwind for Australian investors in the short term. Kadir says, Netflix may cannibalize its own user base once they start ad-based servicing. What do you think? Good question. It's actually a good comment on that in the report here. Let me just find this really quickly. The company basically says that they're not necessarily going to force everyone onto ads. What they are going to do is give people more options. So if you're one of those, you know how, and you've probably seen this, that on on most Netflix accounts, there are multiple people using the same Netflix account. And so Netflix knows that that's an issue, right? And they need to get more people paying in order to grow their profit. But one of the things that they can do is they can just offer more services, and they can say, well, hey, we know you guys aren't paying. Maybe you do the ad-based tier. And so maybe that's the way that they go. There was actually a comment in here, and for the life of me right now, I cannot find it. But they did talk in here. Here we go. Yeah, so finally, we've landed on a thoughtful approach to monetize account sharing, and we'll begin rolling this out more broadly in early 2023. After listening to consumer feedback, we are going to offer the ability for borrowers to transfer their Netflix profile into their own account, and for sharers to manage their devices more easily, and to create sub-accounts if they want to pay for family or friends. In countries with our lower ad-supported plan, we expect the profile transfer option for borrowers to be especially popular. So that, I think, answers your question, which is a great question. Brendan, you said, have you slowed down your US investing now that the Aussie dollar is weaker? Yes, a little bit. And that relates to Peter's question. Yes, a little bit. I did invest in a currency hedge the other week, which was this one. So I invested in this currency hedged ETF, which is the currency hedged version of this one. So full disclosure, I own both of those. Brendan, you said, I tried Rings of Power, but couldn't get into it. 0 for me. Gee, tough crowd. Raymond, you've said, is this, you're on Facebook, Raymond. Hello from Facebook. Is this channel very pro ETFs? I really like ETFs, Raymond. I love ETFs, but I also enjoy investing in individual companies, particularly companies that are super powerful companies and have strong economic moats and all the rest of it. Squid Game, RBT. Ask about that, but you've just contributed. Thanks for that. Jennifer, you said, what I like about the US stock market is that it provides access to other markets. I have a Taiwanese stock that I can access on the Taiwanese stock exchange or the US stock exchange. Yeah, that's great. Yeah, so TSCO is one of those great global companies which you can access in multiple ways. So that's a fair point. Okay, so I'm going to get back to the topic at hand, which is talking about Netflix. So Netflix have a rather ambitious forecast for the next quarter. Everyone knows that if we look on this line right here, which looks like it was created in Microsoft Excel, the global streaming paid memberships line, what this does is it shows you that the company's growth has slowed. But in the next quarter, they expect to add 4.5 million new additions, which is really impressive. They expect that the company's profit margin will decline in the next quarter because they're going to be spending more on content in that quarter, which is what they normally do. So they don't expect to report profits, but they do expect to report a revenue figure which is slightly down. And if we do see a reversal of the US dollar against some major currencies, we might see some of the company's benefits. So to Peter's question or comment earlier on, yes, it might be bad, Peter, for Australian investors who invest and then the Australian dollar appreciates, meaning that the US dollars that you've just bought goes down. But the companies that are purchased may report bigger profits, depending on the company, of course. So all in all, I would give it result, like a B+. I'd give the net result probably a B+ as well. I'd say that's probably, I'd say they're probably like pretty good. Netflix is C's or maybe even fails with its results. So that's a pretty good result for them. Turning to it is probably the most dominant company in the world is Visa. Visa is the world's largest payment network. And I said here that it's got operations in 200 countries and it has 3.9 billion cards issued with the Visa logo. Just going to check, but I believe even if you do Apple Pay or Google Pay, yep, it says it's on there, you'll see the Visa logo. So the key to what Visa does is Visa just clips the ticket basically every time you tap and go, every time you swipe your card, every time you make a transaction website. Like chances are it's a Visa website that you're on. In fact, around 50% of payment volume in Europe and North America, and it probably applies to Australia as well, is through the Visa network. And the Visa network, just for those of you that don't know roughly how it works. The business started in the 1970s. It issued the first card. It was actually built by Bank of America. And Visa basically connects financial institutions. So, for example, if I tap my card here in Australia, but let's say I'm a US citizen and I bank with Bank of America, it would automatically recognize I have the money in my bank account because Visa is the one that performs the interchange, the connection between the different financial institutions, and approves that transaction. And there are alternatives to this. There's the MasterCard network. There are some Chinese versions, but then there's also in Australia, there's FPOS, and FPOS is a cheaper alternative. There was a massive row between Visa and Amazon, and I think I had this in my notes somewhere. There was a huge, argument, I guess, between Amazon and Visa. In the UK, Amazon denied anyone from using a Visa card, because they said you keep charging everyone so much when we're trying to drive down prices of products. And Visa said, well, hey, we're the biggest company in the world. You can take it, basically, take it or leave it. But they've since reached an agreement. And I think that only just serves to highlight like the biggest consumer brand in the world, which is Amazon, fighting against Visa. It shows you how powerful Visa truly is. I think that's a key thing that we should take away. We covered Visa not too long ago on Selfwealth Live, and I basically just showed that it's probably got the best economics. That means like profit margins, retention of customers in the world. And you can see the share price here over way back, and it even looks more impressive. And Visa just benefits from more people going on holidays, more people transacting Apple Pay. There are potential competitive threats coming for Visa in the 20-year mark, like things like blockchain-based technologies. For the meantime, it's still the number one exchange in the world. So, Rob, you got some good questions here. Raymond, you've asked, hey, Raymond, did you just jump across? Great. Is it worth investing in US stocks instead of Oz? Raymond, I don't think, I know some investors who only invest in US stocks, and I know some investors who only invest in Aussie stocks. Like I think there was a comment earlier on. Where was the comment? And it was a very sensible comment. Paul said, for everywhere else, he uses an ETF, which is a reasonable way to do it. So I think for me personally, I do like to get ETF exposure to global markets, but at the same time, I would use direct stocks if there was a type that I just simply think was fantastic. And some of these companies tonight are those types of companies. So, I think that's a key one for me. Any Japanese stocks you would consider buying? Big Billy, I actually don't have a lot of exposure to Japanese stocks, to be honest. I tend to pick my fights carefully insofar as I tend to focus on the Australian and US markets because I can only be spread so far, I'm familiar with a lot of the US businesses and the reporting structure and all that sort of stuff. But when it comes to different businesses, outside of I don't really have much time, so I have to pick my battles. And so those businesses, I usually rely on ETFs or even active fund managers to get that exposure to. I was going to try and find Nintendo, which is one business that I have followed over the years just because of, obviously it's a consumer. But there are many businesses in Japan that have really unbelievable businesses and just incredible business models. They just don't have this. They don't have the same view of, I guess, capital and how companies are run that the Australians do, and the US managers do as well. But it's a fascinating market. So a company that many of you probably haven't heard of is a company that you probably should hear about because it's a really interesting business. It's a much smaller business. You might remember a few weeks ago we got Home Depot, which was this company, and how it's one of the best performing stocks in the world since I think it's the 1970s. It's just an incredible business, the USA's version of Bunnings Warehouse. Well, there's like a smaller competitor to Home Depot. And when I say competitor, it's not really a competitor, but you can see it says for life out here. and it's actually a company called Tractor Supply. And Supply is like maybe it's like equivalent to like a Mitre 10 here in Australia, but a much smaller version. And they have these stores all across the US, but mainly if we zoom out, we can hopefully get a better view of things. But a lot of the stores are like centralized in rural areas. So the business focuses on serving customers very simple things. Like they want chicken feed, or they want drills, or whatever. They just focus on delivering a very simple and more family orientated service. And that's been the key to their success. In fact, a lot of people think, well, why does Amazon compete with them? It's because if you want 20 kilo chicken feed, it's easier just to go down to the store and get it when there's a Tractor Supply near you than it is to go and order off it and get it from an Amazon distribution center. And these businesses, they don't really compete in that space, but you can see that there are online delivery, these types of things here. It's been a really interesting business over a very long period of time, and it's performed exceptionally well. It's kind of like a family-run business that's on the stock exchange, the way they think about culture and they think about different businesses. And one of the things, for example, that they're looking at is, we take this for granted in Australia, but every time you go to a Bunnings Warehouse, there's the garden centre, and then there's the little cafe, then there's like the trade centre. Tractor Supply is now starting to toy with that sort of stuff. It's starting to say, well, hey, why don't we use that bit of the car park for a garden centre? And it's starting to organically create so much value through its business. So businesses that we're talking about tonight, this is the smallest business, I believe. Market cap of $23 billion, which by US standards is probably like a small or a mid-cap company, whereas in Australia, this would be a blue-chip company, right? So, I think that's a key business that we want to have on our watch list. So just saw a question come through. Lone Will, do you think it is the wrong idea to buy stocks with this AUD strength? And that's what I mean alone. I don't necessarily think that when we talk about these companies tonight, I don't want anyone to go out and buy them all just based on what they hear here. But I'm just trying to fuel that kind of the idea process for you, an overview of the companies, so that if you want to go and research them. And then in time, if you think, wow, this is a really interesting business, maybe now the currency is better, maybe now is the right time. Let's just have a quick look at the currency. So AUD USD. And you can see, the current week, this is something that we talked about, I think it was last week or the week before. A big issue right now is obviously, will the US dollar continue to be stronger against our currency? To be honest, I think the long-term average is around 73 to 75 cents. So we are a bit below that. I'm starting to get a little bit, to be honest, that if I was to invest a lot of money overseas, it would be the wrong idea. And when the currency is within fair value of the US dollar, so what I would say is around the average, happy to invest back and forth. But that's just my, I guess, belief of how I manage it. Some investors will say, use currency hedging, all these other things. I think that if I'm investing for 5, 10, or even 20 years, which is my time horizon, I tend to think too much about the currency beyond, is it within a reasonable range? I think that's the key thing here. Alone Will, you said, I'm a software engineer and I mainly buy the tech one, and pretty impressive outcome. Alone Will, sorry, can you, when you say you mainly buy the tech stocks? Yeah, right, I think that's what you're saying. Great. Invest in your backyard. We will need it to stay ahead of inflation. Yeah, good point. Robert, I think you're talking to Rob here. Is there any interest with investing in zero meat companies, plant-based? They're trading value because the leadership in China just purged all market-friendly leaders and disappear successful businessmen, and the books are cooked. That's why they delisted in the US. So one of the risks here, Robert, one of the key risks here for investors who want to invest in Chinese companies is that even if you invest in Chinese companies that are listed on the United States Stock Exchange. For example, we've got things like Baba. I could be mistaken, but I think this stock is actually called an ADR. So let me just check this out. Baba stock. Yeah, so it's actually what we call an ADR. An ADR, an American Depository Receipt. And this basically means that it's listed in another country, but you can get exposure to it through the US stock exchange. I don't understand the legal implications of these well enough for me to get very comfortable with owning them. So one thing that I think a lot about, and I think we've spoken about this in the live sessions over the last few months, is that I professed in country is very stable democracy. That's not necessarily saying that China doesn't have that, but as we know, like that's a risk that we should be aware of, is the geopolitical risk. So for me, I just don't know enough about them to get a lot of comfort to even really talk about them. I hope that makes sense. Okay, so Tractor Supply reported results. It even increased its outlook, which is very rare amongst US companies. Really impressive. It's not quite as established as other businesses that we've talked about, but I've definitely got it on my watch list, and I think it's a really impressive business. One of the companies, Stevie, I like, just like mining, I prefer tier 1 jurisdictions. Yeah, it's probably fair, right? And that's what happens. We see the mining companies that have the best quality assets are the ones that perform the best over the long term. There's no surprise really there. So Snapchat, or Snap Inc., is one of the world's largest social media platforms, and it has done one thing that only really TikTok has done, and that is capture the Gen Z audience really effectively. I think in the 20 countries, here we go, we've got it right here. Over 75% of 13 to 34-year-olds in over 20 countries use Snapchat. Incredible number. When you think about the fickleness of young people in technology and the attention spans, how well Snapchat has done. It's incredible. I was actually reading some analyst reports on Snapchat today, and some analysts believe that this is not my estimate, but some analysts believe that Snapchat shares could be as much as 50% undervalued, and they base that on very strong growth assumptions for users, but also for advertising. The thing about these platforms, however, which I will mention, is that a lot of people talk about, they talk about number of users on a platform. But the number of users on a platform is necessarily the only factor that you should consider when you're looking at these companies. What you should also consider is the price per ad. I think REA Group does a really good job of this, the Australian company, realestate.com.au, as well as car sales. They don't call it price per ad, they call it yield, as in the yield per ad shown. And they basically say yield prices are increasing, which means like the price per ad is increasing. And so with a business like Snapchat recorded heaps of user growth, but the revenue per advertisement was down. This is very similar to the sentiment that was shared from YouTube, where their revenue down too, obviously with currency. But the big takeaway for these social media platforms so far this year is that advertising has got a lot more difficult. So, the last 5 years or so with COVID and what have you has meant that these companies have done a tremendous job of monetizing people shifting online. But now advertisers have spent so much on these platforms that it's not really excelling. And we can see what's happened as Snapchat's come out of COVID and TikTok has arisen. But you can see like user numbers, Snapchat, if they are to be believed, which I think they are, we can see that still like there's been a lot of growth in user numbers over the last 12 months, which is incredible. So yeah, I also think they do a good job of monetizing outside North America. So Snapchat is definitely one of the businesses that I would have at the pointy end in terms of risk. It's definitely it probably is the riskiest business on this list. Its results weren't very strong. Tractor Supplies were probably the strongest at like an A+. Visas were probably an A, and as I said, with Netflix and Google, probably B plus is how I'd give them, how I'd score them. The final company that I wanted to talk to you about tonight is actually Microsoft, probably the most well-known company in the world. Microsoft is an incredible, a truly unbelievable business. When we talk about Alphabet / Google, Apple, Microsoft is just an incredible business. From day one, basically, Microsoft has been an incredible business. And so Alone Will, you said the MACD for Snap is not looking well, and RSI is so moderate. So those are technical analysis strategies that you're talking about there, Alone Will. For everyone else that's playing along in the chat and doesn't know what Alone Will is talking about, those are a technical analysis. I think we can actually bring them up on the charts inside Selfwealth. I've never done them myself, but I think we can use, maybe we can't use MACD here. Anyway, so Microsoft is an incredible business. And you know that a business is large, that when you go to the page and go to the About Us page and you click on subsidiaries, it actually lists the countries of the subsidiaries. And then you go from there into the companies that they own within those countries, not just the businesses overall. And so if we look here, just a quick, for those that don't know, Microsoft obviously owns Windows. It owns things like Bing. It owns things like Office 365, Azure, which is the cloud platform. It owns the Surface devices. It owns that keyboard that's sitting there just beside me. It owns LinkedIn, GitHub, Xbox, and it wants to buy Activision Blizzard. So incredible. Peter, you've said, hey, Selfwealth, could you send out a reminder email for subscribers a little before the hour rather than a little after? Yeah, good idea. We'll try and do that, Peter. Thanks for the feedback. I would describe Microsoft's results as very good. Now, that is not what you probably see if you go into, it's not available inside my Selfwealth account right now, but if you go into the after hours trading of Microsoft shares in the US stock market, you can see they're down nearly 7%. The reason that the results are down, that the company's down 7%, investors were spooked by the company's outlook of the impact of the US dollar. So here you can see the company, the results, but you can see the impact of currencies, and then you can see constant currency results. So read it, you can almost read it right to left. You can see, for example, that office products in the commercial division was up 13% in constant currency, but take away the currency impact, it was only a 9% growth. And then if we go down to some other businesses like, say, Xbox, which is something that it owns, a gaming console, 4%, currency impact of 2% is negative 6%. So the company was seriously dented by the currency movements. But overall, Microsoft's results are incredible. Another weakness for most investors, at least from what I could read in the analyst notes, was that a lot of investors were a bit spooked by Azure being their cloud product, Azure slowing down. But Azure, just so you know, is still growing at about anywhere, depending on which slither of it you talk about, between 25 and 40%. So it's slowing down. This is a multi-trillion-dollar company, and that is a multi-billion-dollar business still growing in high double digits. So business that I don't think is necessarily going away. And overall, you know, Microsoft stock, if I bring it up inside Selfwealth, if I bring it up here, Microsoft stock is actually, it's been surprisingly weak lately. But this is one of the businesses in the world, and it's been sold down so aggressively. And I would say the weak US economy and the strong US dollar, you know, if I could just zoom out for a second and just talk generally about these businesses, there, at least for an accumulator like myself, there aren't many times investing when you get the chance to look at super high quality companies with a long-term perspective and buy them at a reasonable price. The saying from Charlie Munger is, I'd rather own a wonderful business at a fair price than a fair business at a wonderful price. And those times when you get a fair price actually don't come along all that often. So I think that's a key thing for me, is like I'm actually looking at these businesses and, hey, for the first time when I do my valuations, they're actually coming up and they're looking decent. And that's really rare for these super high quality companies. Kind of excited. Jason, Apple and Microsoft are direct competitors. They are direct competitors. I have everything on my side of the room is Apple. Everything in my past is Microsoft. So there's a competition on here too. Robert Hardy said, "Go Goro on the New York Stock Exchange. I've never heard of this business in my life. Sorry, mate. Yeah, it looks cheap. Go Goro. It's what's the ticker symbol there? If I can get it up, I'll have a look. But Sarjan, you've just asked a question. What is the best way to find the shareholding pattern in a company? For example, how much WiseTech shares does Richard White own? You can do that on a bunch of different websites. But so, for example, Market Index does that really well. If you go to the Market Index website, Sarjan. But there's another way you can do it. If you go into the annual reports, every company has to disclose. So I'm going to show you the slow way, but the best way. Every company disclose their top 20 shareholders, and it's typically at the back of the report. So if we go down the very back, I'll just write down. It's typically down here somewhere. So I'll just have a look. It's not always on the last page, but it's typically right down the bottom. I might just do, here we go. What's this? No, that's subsidiaries. That's something else. But it's typically in the back of the report. I don't have it. Sure enough, it's not going to come up for me now, Sajan. But this is the way I would check it each and every year, because it's actually really interesting. This might not have it. It's not audited. It's not an annual report, but see, no, it's not here. So the other way to check, so you'd have to go into the annual report in Sajan. But the other way to check is to actually just look at the remuneration report. So every annual report has to have a remuneration report, and it will say the number of shares that are there. Then every time it buys or sells shares, they have to issue a change of directors notice. And so here we can see this is the latest one by the looks of it. On the 14th of October, Richard White, who's founder, and by the way, a former groupie of Bands, you can see here is got rid of 115,000 shares. And some people might think that's pretty worrisome. But you got to remember, he still has 121 million indirectly held and 1.2 million directly held. So I wouldn't be concerned at all if he sold 115,000. Most of his money's still in the company. I'm sorry I didn't have a good example there. Paul, you've said agreed with the earlier email. And Rob's responded. Fantastic. Alone Will, you've checked this one, which is Okta and Zscaler. So Will, I think you may be new here tonight, but we've actually covered Okta in the past quite a few times. So Okta that we have covered in the past. I haven't checked out the latest results, so I can come back to you on that. But Okta is a company that we've talked about in a previous Selfwealth Live. Zscaler is another business that I've covered elsewhere, but I haven't covered it here, so maybe I can do that. RBT Cat. Microsoft pays dividends. Does Apple? Yes, Apple does. They both pay dividends, but because of the ineffective taxable nature of dividends in the United States, both of them also prefer stock buybacks. Is their preferred way of giving money back to shareholders. Most of the tech stocks in the USA move to cybersecurity stocks, and people's appetite move away from FANG companies. Well, I would probably push back a bit on that Alone Will, because I would say that if you look at if you look at a company like Okta, for example, so Alone Will, you can email Rob if you like. So if you look at a company, say like Okta, what Okta does is single sign-on technology. So you can sign into Okta and then you access all of your apps in one place. So all of your company apps, developers can use it through Auth0 and so on. But if you look at Okta's business model, which I like, I think the CEO and CFO and CTO are fantastic, by the way. But if you look at their business model, Microsoft and Google have exactly the same technology. So that's something to keep in mind. Fleur, you've said, how are stock buybacks a benefit? This is a very controversial thing right now, Fleur, but exactly. The stock buybacks basically reduce the number of shares that are outstanding. So Visa did this recently. If I can have a look. So Visa did this recently, and they announced here, if we look here, the board of directors increased Visa's quarterly cash dividend by 20%, and they authorized a new share buyback program of $12 billion. So as Jason says, artificially inflates the price. So imagine, you remember that old example, Fleur, of how we talked about a pizza that you could buy for $20? If you cut the $20 pizza into 10 slices, it's $2 a slice. But now imagine that instead of cutting it into 10 slices, you cut it into 5 slices because there are only 5 shareholders. Well, now they're worth $4. So the share price, the price of each slice has gone up just because there are a few of them. Peter says, and this is another cynical take, which I agree with, buybacks are great for board and executives to get their performance bonuses. Now, there's actually, I think buybacks actually do cop a bit of a bad rap sometimes. I think share buybacks are actually reasonable, and particularly when a company's shares are undervalued. The company closely, but I know a lot of people believe that to be the case about Whitehaven's share buyback. And buybacks can be good for your tax reasons too, particularly, yes, if you're in the US. So that's key there. Jeremy said, I'm really keen to buy a new chunk of Apple or Microsoft shares. I'm really struggling to pick. Sure, I could go both, but keen to get non-personalized thoughts / insights. Jeremy, yeah, as Rob said, that sounds like very personalized question. So Jeremy, I can only speak generally on the companies, of course, but what I would say is that they're two full businesses. I can say much, and at the end of the day, it comes down to valuation, right? So, do you believe Apple is cheaper than Microsoft, or position sizing at the moment? With the weakness in Microsoft, I'm very keen to do some more research into that business and try and arrive at my own valuation. I know that you now know how to value companies, and so you can do that too. But I think both of these businesses are really interesting. I think, to be honest, I prefer Microsoft's software first approach because Apple is still somewhat in a big way dependent on hardware sales, more so than Microsoft. But I think both businesses are really interesting. So Fleur, back on the buybacks, you said, but why would you sell them in it for the long-term investment? So a lot of the times, Fleur, what happens when a buyback takes place is you don't end up selling your shares. What happens is you have to, it's typically they're bought on market. So if someone's already selling their shares in their brokerage account, those can be bought back by the company, or the company can approach big institutions like, say, Australian Super, and they say, hey, Australian Super, you've got $2 billion worth of our shares. Can we have some of them back? And we'll give you the cash. And some of those big institutions take it up. So, yeah. Stevie, you said Whitehaven's first buyback is reasonable, 10%. What about their second upcoming one, 15%? Yeah, I mean, I don't follow the company that closely, Stevie, but what I would say is that for buybacks to be meaningful, a lot of businesses put out buybacks on the stock exchange, and they're really not meaningful. They're only buying a couple of % of shares back. So when a big one comes in, it moves the dial, and that's what we're seeing here. Basically, with Whitehaven, heaps of free cash flow. They've said, we're going to buy back shares. They're way too cheap. And look what that signaled to the market. Now, there are times, if a company does a buyback, they can't just buy back shares willy-nilly. They have to buy back when the shares are below their valuation, their belief of the valuation. So for me, I encourage companies to do buybacks if it's more efficient than paying a dividend yield to shareholders. So is it below? I don't know if it's still undervalued, to be honest. I don't know the answer to that question. So if I knew the answer to that question, I could have maybe a bit of a better perspective on it. So apologies there. So we've got a few minutes left, and I've got to do the top 5 most bought and the top 5 sold. So I feel like what we're going to do is we're going to get your guesses in, please. And I think, Rob, I've got the most bought or sold, but I've only got the top 3 to go through tonight, I believe. Rob, if you are in the chat, can you please let me know if we're doing top 3 or top 5? But as always, every giveaway on Selfwealth Live, if you guess the most bought and the most sold, and you do that live, you'll get a free pass to our value investor program, and you also get some free trades inside Selfwealth. Are ETFs in? No, ETFs are not in, Jason. So make sure you pick based on last week's trading inside the Selfwealth platform, what is the most bought and what is the most sold stock. And if you get both correct, of course, you email us marketing@selfwealth.com.au with a screenshot or some sort of proof that you are who you say you are in YouTube. And you get all the stuff sent to you. So Peter, I can see, has guessed LTR, most sold CXO. Paul, you've said no idea/no idea. I never get one either way. Well, I'll tell you what, Paul, you know what would be my strategy? I don't know necessarily what's on the list tonight, but what would be my strategy is to pick, this is my strategy just generally speaking. It has to be a reasonably large company. So typically over $1 billion. But 2, it should also be a company that had some sort of price action recently. So it might be companies that are involved in a sector that's really interesting. Because, like always, Commonwealth Bank, CSL, BHP, all of these companies, I feel like are always going to be in the top 10. They might not be number 1 because they don't necessarily jump around a lot. So why are people settling? I don't know why people are selling, to be honest. So JJ's guessed most bought BHP, most sold Pilbara. Mike's guessed Whitehaven most bought, Pilbara most sold. You're going with PQUL, Jeremy? What does that mean? But buy is BHP, but sold is LKE. Okay. So Rob, I think the top 3 most sold and the top 3 most bought. Okay. So we will go in reverse orders. So in the top 5 most bought, got 1, 2, 3, 1, 2. Okay. So here we go. In reverse order of the most bought shares. In at number 5, sorry, Mike, is Whitehaven Coal on the most bought list. And I don't remember who said it, but Pilbara is number 4 on the most bought list. In at number 3, and I think maybe Jeremy, you guessed Lake, is Core Lithium. So Core Lithium at number 3. Now, this is where things get interesting. In at number 2, we've got Fortescue Metals Group bought list. Why are people buying this? Let's have a look. Good dividend paying stock. Okay. Interesting. In at number 1 is BHP. So for last week inside the whole Selfwealth platform, BHP was the number 1 most bought. And I think that makes a lot of sense. We can see it's like the biggest company in Australia, but also, we've seen some weakness recently. So maybe people are thinking now's the time to scoop. Maybe there's a bit of dividends on the horizon, maybe something like that. I think that's really, really interesting. So in at number 1 was BHP. Number 2 was Fortescue. Number 3 is Lithium. Number 4 was Pilbara. And 5 was Whitehaven. Rob, I think you've got the top 3 for me on the most sold list. But interestingly, one ETF. But fortunately, it doesn't matter what's at number 3. So the top 3 in the most sold list are as follows. Number 3 on the most sold list for last week is an ETF. And I've just included this because it wasn't number 1, so it doesn't really matter too much. But the BetaShares Australian Strong Bear. This is a thing that goes in the opposite direction of the stock market. So people use this as a trading ETF. This is one of the trading ETFs that kind of exist. There's a few of them, but this is one of them. In at number 2, and I've got my list, is Pilbara. Pilbara in at number 2 on the most sold list. Let's have a look why people are selling. On the right page. So people are just taking profits, which makes sense. It's reasonable. Take your profits. But still people are bullish overall. Now, drum roll, please. In at number 1 sold list is Core Lithium. Core Lithium at number 1 most sold and BHP number 1 most bought. Did anyone guess this? Let's have a look. Plenty of BHPs in the list, plenty of Pilbara. One guess core lithium is the most sold. That is my key question for tonight, Rob. Did anyone do it? Paul, you've said brainstorm became a brain fart. I feel like you're talking about brain chip, which is this one right here. Still, it's holding up. You know, I've been a skeptic. It's holding up. It's not quite zero yet. Not saying that it is going there, but it's, not quite there. Luke, you guessed bought BHP and sold core lithium. I think we have a winner. So if that's the case, I think you're on the money, mate. I think you are on the money. I see Luke guessed bought Sayona Mining and sold Pilbara. Epic guessed bought Pilbara. Both the same company with a different accent. Interesting. So that's it for tonight. If you did get those correct, please send us an email, marketing@selfwealth.com.au with your I guess YouTube handle. Paul, that was in reference to yours. Oh, right. Okay. SYA. I get you. So Sayona Mining, I think it is the one that you're talking about, not brain chip. Okay. Yeah. Look at the volatility on this thing recently. Gee willikers. Look at that. That's really bouncing all over the place. That's a roller coaster amongst roller coasters. Okay. So I do like to finish the show on a bit of a quote. Software is a great combination between artistry and engineering. This is from Bill Gates. We started with a Bill Gates quote / joke. We're ending with a Bill Gates quote / joke. Software is a great combination between artistry and engineering. And I think that's a really apt way to describe it as someone who, myself, I wouldn't call myself a technologist, but I definitely am someone who is interested in programming and software. And that's the way I describe it too. You basically take an artistic problem and you solve it with science. Paul, you said volatile, but I'm mining cheap. Well, that's great. If you haven't already subscribed, please do so. Rob and I, this is the one metric that Rob and I look at. If you haven't already subscribed, there's a very sad young lady here who's very, very sad, and that will be Rob and I tonight. If we look and we see that you didn't subscribe to the show. But before I say goodbye, there is actually, I think Facebook may report it as quarterly results. So if you're interested, you can walk me through this. I want to just have a real quick look. Yeah, so it looks like it's just recorded its earnings. So let's have oh no, it hasn't done it yet. So it's not yet. It's at 2 p.m. So I'm going to be tuning in because this is going to be a really interesting result from Facebook / Meta. Meta's obviously the owner of Instagram. It's the owner of Facebook. It's the owner of Messenger. It's Reality Labs, WhatsApp, and so forth. It's a business, a blue chip business. It's on the nose right now. So with Apple changes in iOS and with a really volatile media and marketing landscape, Meta is a company that maybe I can cover next week. But tonight, Jason, you've said, I predict the Facebook fad is going to end in a 3-year time frame. Well, Jason, I think, this is going to be a really interesting one because I feel like it's under a lot of pressure on basically every front. I've actually got, and I'll just quickly step off. This is not something I've done on Selfwealth Live before. I actually bought myself an Oculus device, which is one of these virtual reality goggles. I've never, ever had someone put on these goggles and wasn't blown away. The technology is truly incredible. I don't know whether Facebook will be the one that achieves something in the metaverse, but I know that all of them are going to be vying for it because it's an incredible way to engage with technology. So we will say short man. But see, this is the thing, Jason. The thing that makes short selling so difficult and betting against a company so difficult is that even though people might say short Meta, like short Facebook, the valuation has already adjusted, I believe, to the company being in that fickle position. If we look at the stock price, look at the share price is way down. And this is a business that is hyper profitable. This was called the greatest business to ever exist. So I think that shorting is very difficult for that very reason. So the company is still investing $10 billion a year in that thing which you just saw. Not exactly that thing, but the technology behind it. And that could either be the greatest investment of all time or the worst if it doesn't work out. So I'm just playing along from a distance at the moment, but fascinating stuff. Anyway, guys, thank you for tuning into Selfwealth Live tonight. Next week, we should have Kerry Craig from JP Morgan Asset Management on the show. We should also have Nathan Bell, super popular investor here in Australia, on the program in the next few weeks or months. So keep an eye out. Don't forget you can find us on Selfwealth Live, hashtag Selfwealth Live on social media. We'll be doing some short videos, so check those out too. Comment them, please, and share them around. That's a new feature that's coming to YouTube Shorts, I found out today. So thank you for everyone that joined us tonight. And until next week, we'll see you next week. Rob and I appreciate you stopping by. Don't forget to like it and subscribe.